My name is Wes Forslund-Mooers, and this is my firm valuation for the Boeing Company. So to kick it off, just a quick overview on the Boeing Company. It was founded in 1916. It now employs over 170,000 different people. Their business is broken up into three different segments: commercial airplanes, which makes up 43% of their revenue; defense, space, and security, which makes up 32% of their revenue; and then global services, which makes up 25% of their revenue. And in 2023, they posted a revenue of 77.8 billion, where their net income was negative 2.22 billion. A little quick industry overview. Boeing, of course, operates in the aerospace and defense industry. Like I shared before, they both sell airplanes and then also operate on military contracts. The total market size of this industry is 884 billion USD, with key competitors for Boeing such as Airbus, General Dynamics, Lockheed Martin, RTX, etc. They have many different competitors depending on what segment you're talking about. So Airbus is, of course, Boeing's number one competitor for commercial airplanes, with the industry essentially being a duopoly. As you can see in the graph in the top right, Airbus gross orders have exceeded Boeing's gross orders in the last couple of years significantly. And then as far as the industry as a whole, Boeing is the biggest player in this industry with the largest market share, as you can see in the graph in the bottom right. Boeing has had numerous headlines over the last few months as far as current events goes, almost none of which being good for the firm. They have had countless issues with quality of the Boeing aircrafts, resulting in the landing of numerous different commercial flights, and even a few deaths due to turbulence. There's been extreme public scrutiny over their safety measures and the checks that go into their supply chain. And then these issues haven't just been across commercial airplanes. They also had issues with their Starliner spacecraft, with the launch being postponed, trying to go up to the International Space Station. And then the only positive current event for Boeing as a firm is that there have been increased arms packages approved to fund overseas conflicts in Ukraine and Palestine. And a lot of this military spending does go to contracts to Boeing. So all of this can be manifested in Boeing's 2024 quarter one results. As you can see, the revenue for commercial airplanes, as you'd expect, was down significantly to 4,653. Of course, this is in millions. And this is down 31% from the first quarter of 2023. They observed a loss from operations of 1,143. In 2023, this was 615, a loss of 615. So not only is the revenue itself plummeting, but the margin is as well. Defense, space, and security had revenue increase of 6% and earnings from operations of 151, whereas in 2023, the earnings were a negative 212. So we're seeing a big increase in the margins as well as a slight increase in the revenue. And then for global services, revenue was up 7% and earnings was at 916, whereas it was 847 the quarter before. So a slight increase in earnings as well as revenue. So margin and revenue staying fairly steady in that regard for global services. And then all of this also, of course, impacts Boeing's free cash flows. And in quarter one, these were detrimental to the firm with negative 3,929 of cash flows going out, compared to 786 from the year before. And this bleeding must be stopped in the short term for Boeing. So moving on to my model, there were numerous assumptions that were made to get to the final valuation, some of which were easier to make than others. I believe the sales growth is probably the easiest to make because there are analyst expectations of revenue that are open to the public that I found on Yahoo Finance. And analysts concluded that they expect a 2% increase in sales growth for the firm in 2024, and then a 19% increase in 2025. And then after that, I believe that the sales growth will steady out to what it was pre-COVID days at about 20%. As far as margin goes, as we saw in quarter one, there was a dip in margin for the commercial airplanes. And I think that this will have an impact on the gross profit margin of the firm in 2024. And that is why the margin will dip from 14% to 11%. But as you can see, in the last 3 years, there's been a steady increase of 2%, again, trying to get up to that normal operating pre-COVID values that we were seeing before then. So I believe that after this year, Boeing will figure out their supply chain issues and the margin will increase back up to around 19% steadily. And the same goes for EBITDA margin. I use similar rationale that it will increase to what it was pre-COVID, which is about 15%. And we've seen a steady increase over the last 2 years. And I believe that it'll continue to increase. So my next big assumption that I made was regarding capital expenditures. And I believe the capital expenditures will increase by 500 each year for the coming 5 years. And this is consistent with the previous growth that we've observed across Boeing. And then also the statement in their 10K that they shared, it says that they are planning to expand capital expenditures. I use the useful life of assets of 8 years, which is consistent with the past values. So for my deep dive number one, I decided to dive into other current liabilities on the balance sheet. And this line item makes up about 58% of Boeing's current liabilities. So I thought it would be irresponsible to straight line it and ignore it. Other current liabilities for Boeing is a liability that is due to billing work in progress throughout the life of the contract instead of just when the contract is complete, like most billing occurs. And this approach has grown in popularity since 2020 to protect suppliers. And I projected it as a percentage of sales revenue because it is billing, with the assumption that billing will return to the pre-COVID-19 standards, or at least a little bit above that for billing work in progress instead of billing at the end of a contract. So I made the percentage of sales decrease throughout the next 5 years and then calculated the other current liabilities from this percentage. For my deep dive 2, I decided to go into more depth on the intangibles line item. Boeing's 10K outlines that their intangibles are either indefinite lived or finite lived, and finite lived are amortized, whereas indefinite lived are tested for impairment annually. The 10K provided an estimated amortization table for these finite lived intangible assets. But because we expect an increase in intangible assets for the firm through acquisitions and such, I did not just apply this amortization schedule to the current intangibles. Instead, I calculated intangibles as a percentage of total assets, and I found that it sat pretty steadily at about 8%. So because of that, I was able to find the average across the last 10 years and then apply this to the next 5 years. So I calculated intangibles as a percentage of total assets. So after I was able to calculate the free cash flows for the coming 5 years, I ran a sensitivity analysis on the drivers that impact it the most significantly. And the most important drivers of future cash flows for Boeing were EBITDA margin, gross profit margin, and sales growth. EBITDA margin, it is important to note that it is skewed to the left, as you can see in the graph on the right side of your screen, meaning that decreases are more detrimental to cash flow than increases are beneficial. So the next step after I had the cash flows was to calculate a discount rate. And I was able to do that using these variables. I first calculated the asset beta for Boeing and all of its competitors in the industry and found that the median asset beta was 0.54. I did this through using the equity beta, the debt to value ratio, and then the debt beta, as you can see on the table to the right. And then the asset beta, along with the risk-free rate of 4.5%, the market risk premium of 5.9%, we were able to use CAPM to calculate a discount rate of 7.69%. Oh, sorry. And then to convert this to an RWAC, all we need is the debt to value ratio, the corporate tax rate, and the debt rate for Boeing. And then you can calculate this to 7.41%. So the RWAC takes taxes into account. So using these two rates, we can calculate the value of the tax shield for Boeing. It's also important to note that Boeing's asset beta of 0.82 was definitely on the higher side of the industry, where the mean was 0.63 and the median was 0.54. But the idea is in the coming years, Boeing's beta will regress to the industry norm and settle at around 0.54%. So once I have the discount rate and the cash flows, then I can conclude my discounted cash flow valuation. Before I did that, I just wanted to note that in my forecasts, I was projecting 83% of the total assets and 44% of the total liabilities. And then with the cash flows, I was able to discount them at that rate I just calculated. And the cash flows you see in the middle there are the discounted cash flows for the coming 5 years, and then the terminal value as well. And then to sum all those together, we could get the total enterprise value of Boeing at 158,476, or in millions, 158 billion. So the second approach to valuing Boeing was the comparable companies valuation. And to do this, I use an enterprise value over EBITDA ratio. EBITDA in year T plus 5 was projected for Boeing to be 24,558. And then using the industry median of 17.74, we were able to calculate the enterprise value in year 5 and then discount that back to today and get a enterprise value for Boeing today of 300,845, or around 300 billion. And this is, of course, an extremely inflated number. And we must consider that Boeing's current enterprise value to EBITDA ratio is significantly higher than that of the industry at 61.08, where the median is 17.74. So again, we're expecting Boeing in the coming years to have their EV to EBITDA ratio regress to the norm. And then to make the discounted cash flow valuation match this figure of 300,000, I used GoalSeek in Excel, and it told me that I would need a growth rate of 4.66%, which is, of course, a really high growth rate. Yeah. So we're then able to compare the valuations that I conducted to that of the public information that is available to all of us. My financial data was taken from the year end 2023. So we must compare the respective enterprise value, which, as you can see in the table above, is $196.59 billion. And then I again used GoalSeek to figure out that to match this 196.59 billion, my discounted cash flow model would need a growth rate of 3.08%. A really important note about this is that all the assumptions and drivers that I was using my model were made using current event information that is available in June of 2023 or 2024. Whereas the enterprise value on December 31st, 2023 was not, of course, using that information. So that would explain why my discounted cash flow model gave us an enterprise value much lower than that of 12/31/2023, even though I was using the same past financials from that date. And then all in all, comparing the EV from Yahoo Finance and my calculated discounted cash flow enterprise value, we can conclude that on December 31st, 2023, the firm was overvalued by 19.39%. However, if we were to use the comparable companies approach for the EV that I calculated, it would be undervalued by 153.03%. Investors must monitor Boeing's EBITDA, not just because it is the driver of the comparable companies approach, but also because it was, along with sales revenue, had the largest impact on future cash flows. So it, of course, would make a huge impact on the discounted cash flows model as well. And the disparities in the models can be attributed to a couple of different things. First off, the nature of the competitors in the industry. There's a wide range of competitors, some of which act purely in defense, some of which purely in aerospace, some of which only manufacture commercial airplanes. And that can give us a wide range of ratios, as we observed for the EV to EBITDA ratio. So using just the flat median might not be the most responsible approach, and that could explain why my valuation was so inflated for that model. And then also just the turbulent times that Boeing is facing right now. It is, of course, extremely difficult to project the sales of a company that is so prevalent in current events and is constantly facing new challenges. Yeah, thank you for listening, and here are my sources.